Hello, my name is Kelly Pryor, and I am here today as part of the advisory panel for Boutique Capital Partners, who are delighted to be bringing to the UK a strategy which so far has only been available in the US market. So I'm here today with Daniel Johnson, one of the co-managers of the River Road US Large Cap Value Select strategy. So this is a strategy run from Louisville, Kentucky, River Road. River Road being launched in 2005 as a business.
Correct.
Currently having 10 billion of assets under management, $1 billion of which is run as a mirror of this strategy. So perhaps you could talk us through the investment team that sit around you and how that plays into the fund, and maybe a little bit about your background and how you ended up at River Road.
Yeah, so maybe I'll start with my background. I sort of took a less traditional path to River Road and institutional money management. I was actually a CPA at PricewaterhouseCoopers. While I did not have a desire to become a partner at PricewaterhouseCoopers, I thought that was a great way to cut my teeth and learn the language of business, which is accounting. But I've always had a passion for the markets. I love the idea of joining a small, more entrepreneurial firm. And so when I found River Road, which was in my hometown of Louisville, Kentucky, advertising for a job for a new analyst, I dropped everything I was doing. Applied for the job. And so I was fortunate that at that time, River Road was looking for accounting skill sets on their research team. At that point in their history, they had no accounting skills on the research team. So I ultimately got the job and came in as an analyst, supporting, which at that time were the only two strategies at our firm, small cap value and dividend all cap values portfolios. That's my background. The team that supports us at River Road, we not only have our portfolio, but there are also two other portfolio management teams at River Road, small cap value and the dividend all cap value team. So we work under the unifying investment philosophy called the absolute value philosophy. And while we run different portfolios that attack different parts of the markets and have different objectives with the yield for the dividend portfolio, we work from that same playbook. And that allows us to communicate and work together and share ideas. The analyst team at River Road is very deep. It's set up a little bit differently than some other shops in the sense that our analysts are all generalists. They're generalists from a sector perspective in industry. And they're also generalists in the sense that they work with all of the investment business groups here at River Road. And so we've got a very deep team. Once they gain more experience, they will start to gravitate towards one of the investment teams. Today, Alan Harris also is a part of our team as a focused analyst. I should also mention, in addition to myself managing this portfolio, Matt Moran is my partner. He took a more traditional route to River Road. Finance background, Goldman Sachs, Morningstar, Citigroup, all prior to joining River Road. And he joined the firm about 6 months after I did.
Okay, so the River Road Large Cap Value Select strategy, this is going to be an OIC, launching around Valentine's Day, hopefully 2025. So this is a truly active portfolio, 20 to 30 stocks, high active share, so I believe. And you're looking for quality companies, but that are great value. Perhaps you could talk us through the process and the philosophy a little bit that sits behind that, and maybe what quality and value actually mean for you.
Sure. Maybe taking a step back, and I mentioned this earlier, our unifying investment philosophy at River Road is called the absolute value philosophy. The objective of absolute value is to generate attractive risk-adjusted returns over a full market cycle, and to do so with less downside volatility in the portfolio. And we really have 4 key tenets of that philosophy. Number one, we're trying to buy excellent companies trading at compelling prices. So this is not deep value. We're not trying to buy the metal vendors trading a fraction of book. We want high quality companies at attractive prices. Number two, we build the portfolio bottom up, one stock at a time. We largely ignore the index. We believe that if you want to look like the index, you should probably just own a passive vehicle. We want to look very different than the index through our portfolio construction process. We also, number three, seek less efficient parts of the market. That's a little bit tougher in the large cap space, but given our level of concentration, and I think our viewpoint on trying to find off the beaten path ideas, we can do that in the large cap space. And then lastly is risk averse. We're very much a risk averse operation. And it really comes through in our self-discipline. It's a unique self-discipline. One of the key tenets of that self-discipline is the fact that we do not average down on stocks. Very uncommon for a value manager. And so I think that's a cardinal rule at River Road and what differentiates our self-discipline process.
Okay, and I think that's quite an important point to point out, because when people think about value, they think deep value or they think relative value. And that's, I think, one of the differentiators for you is the fact that that isn't what you're trying to do, this absolute value philosophy that really sits behind everything you do, isn't it?
100%. And that's a good point. So our absolute value philosophy, we like to say it ideally sits in between deep value and relative value investing, trying to avoid the common pitfalls of both. So for deep value investing, one of the common pitfalls are value traps. And then on the opposite end, on relative value investing, you can get sort of caught up in that momentum of the market. It can work very well for a period of time, but it introduces additional volatility into the portfolio. And given our objective of the absolute value philosophy to minimize volatility in the portfolio, we want to avoid that piece of the market. So our philosophy sits right in between the two.
Interesting. There's a really good distinction to make. Okay. So you've just been through your 10-year anniversary for this strategy for the US product. So I think that was maybe in October or the beginning of November. So happy birthday for that.
Thank you.
Perhaps we could use that as an example for you to show us or to talk about how that's actually worked in attribution terms over that decade, which has been quite an interesting decade.
Sure.
What's driven performance? How has the portfolio actually performed through style rotation? We've seen little pockets of that over that decade, in particular, obviously, earlier on this year.
Sure.
So maybe talk through that for us.
Yeah, so we just celebrated our 10-year anniversary at the end of October. And since, so over the past 10 years, we have delivered over 300 basis points of outperformance during that time period. Our objective in this portfolio is to deliver between 200 and 400 basis points of outperformance per annum over a full market cycle, and to do it in a way that's consistent with our absolute value philosophy. And so if you kind of peel back that outperformance since inception, over 90% of that outperformance has been driven by our stock selection. The remaining piece has obviously been through more sector type attribution for the portfolio. But we believe that we will ultimately drive the performance in this strategy with our stocks. So we're happy to see that we've delivered over the past 10 years. If you kind of look at where we're adding value, we've added positive stock selection in 9 of the 11 sectors. And we've also had positive stock selection every calendar year since inception. If you look into what sector is driving the most value for our portfolio, the financials have been our largest contributor to our outperformance over time.
Excellent. And finally, just one last question. How should fund selectors actually think about this product? What does it add to a portfolio?
Yeah, we think we're in an interesting market in the U.S. If you think about the S&P, there's a large amount of concentration in the Mag 7. You could argue that while that's a core index with the S&P, it has morphed into a more growth-oriented strategy. So we believe that our style of investing and our portfolio can be a great diversifier for someone with a significant amount of passive exposure. Additionally, if you look at the valuations on some of those individual names, Mag 7, or just the overall S&P, we think on a relative basis, value looks incredibly attractive today in today's environment.
Okay, excellent. So, Daniel Johnson, thank you very much.
Thank you.